All right, welcome back for another week of Cramer bashing. Boy, he made some bars today. I did submit that definition to the Urban Dictionary. We'll see if it gets published. If you're listening and you happen to work with those folks, put in a good word for me, because that was a good one. I call it the Cramer bar, and I defined it. And you know what? I'm going to stick to it. So today we're kind of seeing a few things on the buy side that didn't quite pan out, and also some things on the sell side of Kramer's list that didn't pan out. As per usual, we know that some things just don't work out for the guy. We'll trade it as it comes.
Some things, yeah.
As for
really, the only thing that does is NVIDIA.
Yeah, I mean, he'll speak about NVIDIA, but I bet he's going to be real quiet about DraftKings for a little while. Ooh. That was brutal.
CRM, remember Mark Benioff. I mean, he's got man crushes on Jensen, Zuckerberg, and Benioff.
Yeah, and then CRM really. I'm actually looking for possible buy opportunity soon on CRM with that massive pullback, but I'm gonna wait for that to shake out before I jump.
Yeah, I mean, it doesn't seem to want a bottom right now. But I'm watching that too.
It's just on the radar for now. We'll watch it, and when the time's right, we'll trade it.
I think we need Cramer to flip on it to really get a good long entry.
There you go. That's the signal bar. We'll wait for the Cramer bar.
Yeah.
So we're trading SPY a little bit. You were just trading some 0 DTEs, and that 524.15 target was met. And we're looking for
34% now in 10 minutes. I like that.
Gotta love those, man. I love trading those 0 DTEs.
Now you get nervous. You're like, man, I want to take some profits, or I don't want to give it all back. But I mean, I like the way this bar looks here.
I'm always into that half and whole rule, and when it comes to day trading, this has been crucial. And you can look left or you can look at range. So I mean, this target was a mean reversion from high to low. It's about the middle. Yeah, that's where I picked that 524.15 target. Half and whole seems to always apply when you're trading reversion trades, and reversion trades are easy. I always tell everyone at the Bullish Bears, look for those easy trades and stick to them, and you'll be practicing that same kick 1,000 times. You'll be the feared competitor in the karate dojo. So you'll be the guy who's practiced the same kick 1,000 times. And it never ceases to amaze me how often I can find reversion trades on any time frame. And that's pretty much what we use for our analysis style for picking off Cramer too. We can usually find reversion trades all over the place. Anytime the man mentions a stock, there's a reversion trade. I can almost promise you. Same goes for SPY. We get reversion targets pretty well, but half and whole are pretty obvious too. So if we get a half measure of that reversion target towards the upside here, we can see we just wicked and turned around with a big bear bar. Well, next reversion target, half of that comes back to our old resistance level from this reversal down here. So if it breaches back below this 524.15 with some force, the reversion trade's right here. I mean, it's really just day trading. Stick to those reversion trades, and it makes life a lot easier. And it doesn't have to just be day trading. It can be any time frame. It's all going to be the same price action. So outside of this, we could revisit the opening range high. I have a liquidity zone mapped out up here. This is where the sellers were. It was pretty obvious this morning on the open, and that second reach into it got rejected pretty hard. We knew where all the sellers were. That was easy to find. Looking a little further left, I always pick off the 2-hour chart from my zones, and we've got this angular resistance up here on this big wedge. We got an even sharper angular resistance on this downward channel here. This is pretty much the old Elliott wave theory applied. The 3-wave channel is very common. If we see a breach of this angular resistance here with some force, and we get through this liquidity zone, reversion trades right here. 527 is a possible target for reversion even today. So pretty simple analysis skills on that. And this is where we're also looking at the floor. We have a big old 2-hour bar right here down to 521. That's possible. So if things get bearish in the afternoon, if someone doesn't like any data that comes out in the middle of the day, you're going to know it. And knowing where those targets are expected to go is pretty important. And if we get rejected here, the red line, which is that that reversion trade for the day, and we breached this support pivot around 523.35, 523, wherever this range was. Just look at the range. Breach that and get some force going on. The bears are going to take it to this next target. And of course, apply the half and whole rule. If it stops halfway and starts to accumulate, take your day trade off. Make your money. Keep it. Don't let the market take it back. So we're always trading S&P. We're always trading futures over at the Bullish Bears. And, even guys who run funds will trade some 0 DTEs. It's all day trading. It's just easy marks. Those reversion trades, they just get simpler and simpler.
Yeah. I mean, we're launching a 0 DTE ETF soon.
Sweet.
So, yeah.
Is that going to be more geared towards day trading or for a long-term effect of selling?
No, it's going to be long-term. So it's going to be SPY, and then every day we're going to be selling 0 DTEs against the SPY.
Sweet. Those do well, and even percentage-wise, and as if it's a leveraged ETF, those can really add up to some big moves. And I was just saying, I'm going to start writing an article on trading leveraged ETFs. I'm going to start it this weekend. I don't know when I'll finish it, but I'm going to try and finish it this weekend. And explaining the strategy in it, but also explaining a lot of the logic behind it. Because when you sell options to open and you're selling them as an income strategy, life gets simpler. You can trade very much more passively. You don't have to be nervous about things. The example I used was TNA to build the trade journal that I'm going to use to write this article. And a couple times, ordinary people would have been nervous. I was underwater a couple times on that trade, but I was very confident in the price action that I analyzed. And even though I was underwater on my entries, I ended up making a little over 60% return in less than 90 days on that trade. So you can't complain about that.
No.
No one's going to listen. So even though you're a little nervous, you're a little racked against your brain trying to talk you out of a trade, that price analysis is going to be your saving grace. And if you're just calm and collective and trade the chart, you really just can shut the emotions down and make it into a very easygoing, low stress sort of passive income strategy. When you have an ETF that does that for you and it's managed well, but hey, if you're not into learning all the little details about how to trade an income strategy with options, soon there'll be an ETF to do exactly that for you on 0 DTE SPY options. I love it. So here we are back to that reversion target. We've made another step here. We might make an accumulation here for the rest of the afternoon here, and then maybe get an outside move into the close. If it gets bullish above this liquidity zone, we could see a good breakout and hit that 527 target. It is in range. All right, shall we move into some Cramer stuff and start? I want to start with the sell list this time. What do you think?
All right, let's do it.
He had some stuff on the block here to sell, and I was just a little bit perturbed about a couple of them. The other one I could take it or leave it, but I'll start with this Crown Castle thing here. We've done the dope on this before. We had our measured move set up, and it became a reversion trade. So we had our measured move down. We got our reversion trade back here. Now we're back to kind of the middle of that secondary move, and we started, with this double bottom here, we've reverted. Now it's a reversion of a reversion, so this is a little bit more of a shorter term trade, but give or take $100.50, pretty good bull target on this. Okay, we got a little bit of a buy.
100.87 is the 200-day, by the way.
Yeah, I've turned my moving averages off, but yeah, you get the idea.
Right. I know I look at moving averages a lot more than you do. So
I'm all about the price action, and the less clutter on my chart, the better. But everybo's got their own style of analysis, and it's important to know those things.
There is no right answer.
Right. It's whatever works for you. That's the right answer. But ideally, I look at those moving averages. I know where they're at roughly just by looking at the price action. I can kind of get an idea. And yeah, by the time this gets to a reversion trade, I can see the 200 kind of coming down to a little lower than that, maybe $100.90 or so on a daily, and that seems to be about appropriate. So we can agree on that. And
Yeah, the 50-day is 99.01. It rejected the 50-day. For me, I'd like to see it get above that if I were going to go long here.
definitely. And we've already seen the Cramer bar, so he said sell it last night, and of course everybody bought it. And yeah, it sets up that other rule. And even though we have a reversion target on the daily, let's break it down to a 30-minute chart and, kind of weigh out, well, what's half of the half? We hit it today. So when we start to draw those, the same thing we did with SPY. We know where the reversion trades are, and we know where half a reversion trade is. There it is. And the 50-day moving average happened to line up with it. Kind of cool, right? So we can all be right. And that's the point. There is no right answer, but when you start to get 2 different analysis styles, 3 different, 5 different analysis styles, and they all come up with a very relatively close conclusion, then you get one big right answer out of several other answers. And that's where we start to become technical analysts. We pay attention to what others are looking at, and at the same time, we come up with our own thesis. And usually, we are right more than we're wrong once we get the hang of understanding technical analysis. So, yes, we did get a Cramer bar. We did get a reversion trade, even though it's half a reversion. What can we see on this for the future, though? Either we're going to get back to this reversion target and reject and start to go lower and maybe get a good short out of it. So maybe he could eventually be right to say sell this. We certainly have a gap here to be concerned about, and that can certainly come into play and take us to $93 if we break over here. So watch for rejections here.
I could if this rejects again at the 50-day, I could see it make its way back down towards the lows.
Absolutely. So it'll be up in the air for now. It's you can trade the reversions, or you can wait till the reversions finish the move and then go and trade the trend. So I don't know if I want to give him a kudo for that or not. Eventually he might be right, but in the meantime, the short-term stuff says we're more likely to make a couple bullish reversions before we make a full-on bearish swing trade out of this. So half a kudo maybe.
All right, half a kudo.
We'll give him half a kudo. And Jim, if you're watching, we give credit where credit's due, man. Respect that. If you ever throw us a bone, we'll accept that too. Or even if you poo-poo on us, I'm okay with that too. I trade for a living. I got thick skin, brother. Moving into the rest of the sell list here. I don't understand what the heck this company even does. OKLO. He said sell it. Okay, it was a pretty obvious rejection. It's already made a reversion. Market structure's already kind of done its thing on this. So yes, Captain Obvious, it was a good sell here. But do we stay short on this? Well, look a little closer. Here's your 2-hour chart. This accumulation says something to me. It's in a range. Wait for that range to break before you take a trade on it. And it's either going to do one of 2 things. Either we're going to revisit a low, or we're going to make a bullish measured move out of this. And let's go ahead and weigh out both arguments since we have a minute. So half a move's already been made with this wick outside of the primary, right? So we've pretty much nailed that. We're accumulating here, and if it breaks into a bullish move, that target can be hit again. So about 1260 would be primary target, secondary target if it gets moving. 1450 seems a reasonable trade for bulls. Cramer said sell this though, so we're going to accumulate for a while and we'll eventually break into a range trade. If we get a reversion out of it, that's an easy target here for the bears, about $8.90. Give it about half. Look here, there was an accumulation in that range. Pretty simple. Price tends to revisit things. So in the meantime, this thing is one big double bottom, and it's already made a reversion. So anybody's guess. Short term, yes, sell it. But long term, wait, because eventually this range is going to break, and it can give you some really nice bullish trading in the meantime. So kind of wait on this.
The 200-day is 1088. So I would be watching that. If it, it moved below this morning, I guess that was a Cramer bar. And, so far, so good for him. But if it pops back above, I could see you flipping long on this one.
And even though, I set up the obvious price action in that 200's right there in the middle of our accumulation range, right in the mean, and it's right between our primary and secondary moves.
Yep.
Two different styles coming to the same conclusion. That's pretty good odds. So again, that's that argument of whatever works for you. And this has been working for me. I find those primary moves, reversion trade or measured move. Take your pick, trade whatever breaks. And of course, we always say don't trade the setup, trade the break. But in the meantime, you can day trade the setup, so it's only half right. But swing traders, pay attention to this range. It's eventually going to break, and either you get A, a reversion trade, or B, a breakout move for a half or whole measured move up. Trade it as it comes. Don't just up and sell it. I have a friend who works for this next company, and he's telling me all kinds of things are falling in line, and then Cramer comes out and says, sell it. Top golf. Reversion trade, anybody? Yeah, easy. 1572 target. Cramer said sell it, so why not? There's your Cramer bar on a daily already made. One hell of a gap up already. Cool. So let's look further left on this thing. That's where the big enchilada is. So we've got this big old trend here on the weekly chart, and a reversion trade would give you an extension to probably about 1740. Pretty easy mark here. So watch this accumulation. Either we're going to get a bar higher or we reject here and get a short out of it for a bearish reversion. But from what I get on I have a friend, he's not even in management, he's just kind of a part-time guy. He does that while he trades. But long story short, it's not something I like to trade personally, but Cramer said sell it, and here's your bars. Reversion trades on the money.
And this is a name that Cramer has been very wrong on. So last year he was big time bullish, and it just got its ass kicked. And actually, I mean, I kind of like it here. It bounced off the 200-day. I mean, little extended, but 50-day is 1576. Breaks above that, could fill the gap. Kind of interesting.
Yeah, it's looking like it could be a good little short-term long play. And I got 1571 as just a reversion target for that mean, and that's about where that 50-day is. And if it breaks that, certainly can go higher and fill that gap. Agree and agree.
Weird. I've never seen this before, but I just noticed the S&P 500 is not quoting. A reporter just emailed me about it, and I'm looking at it. I'm like, oh man, you're right. It's not moving.
Like the futures or SPY?
No, SPX. I don't know if the futures.
SPX.
I would assume the futures are moving because they're traded. I mean, the SPX isn't traded.
Right. Yeah, it's stalled.
It's been stuck at 5241.69.
That's interesting. Wonder what's going on there.
Yeah, I mean, SPY is moving, but I guess, I mean, that moves on the underlying stocks, so that's not a.
Right. Huh. I've never seen that either.
I've never seen that.
Oh, it moved.
I did. I'm still stuck on 5241.69.
Historical moment. No, I got 5248.20 at the moment.
Oh, you got it moving. All right.
Yeah.
Maybe.
But it was
Weird.
stuck.
I'm looking at my Schwab dashboard.
But it was stuck for a minute there, and there's a big gap here, so there was some data missing. You almost never see that on well, I mean, you do in a pre-market sometimes, but it doesn't trade in a pre-market or after hours, but the overnight you get a gap. But yeah, interesting. Huh. And that was an easy reversion trade too, by the way. I've never seen the SPX do that before. That would have been cool to get into some options trade on that as the IV probably got crushed in that last bar, and then bam, you get a quick move.
Oh, all right, I do see it moving again. Weird. Huh. But I don't actually, I see it moving on TradingView, but I don't see it moving on Schwab.
So I wonder if it's just different broker data streams are being interrupted or something. There,
Something's weird.
there was a rumor that came out like Southwest Airlines computers went down this morning or something. There were some stranded travelers. Maybe we're going through a hacker attack.
Cyber attack.
Yeah. Oh, well, we'll just trade the chart. You guys can't affect us.
Yeah, I mean, I'm trading SPY, so who cares?
Yep. Right on. So I had a few on the buy side, and this is I was just telling my friends the other day, hey, it's looking like it's time to short Disney. Let's start with that one. I'll try to mute as
Disney just sucks.
It does, man. I mean, anytime I see it pop up, it's like whack-a-mole. You just swat it down. Man, those gaps have been playing very well. I have a reversion target currently at $98 for just half of that previous move as a bear target.
I got 99.32, which would be the refilling that gap.
It's pretty much in agreement there. We're both bearish on it, and yeah, it's been some great bear trades. This gap down on earnings was just, I mean, methodical. It went A to B on that block perfectly, or sorry, B to A. But now we're looking for a continuation on this trend, although it has met about half of that target. You can see here, half the distance from here to here has been met. Look for accumulation on it, but because Cramer said buy it, of course, for this whole time. So if it breaks above, 102.45 or so, I could just close it and wait for the next setup. But shorting Disney has been great, and anytime Cramer's bullish on it, we know it's likely to come down a little more. Sorry, Cramer, your Disney buddies are just not doing it for investors right now. No.
Nope.
And we don't mean to be political, but the go woke, go broke definitely seems to apply to Disney, if anybody else.
It always does. They always figure out a way to shoot themselves in the foot.
So for now on the daily chart, I mean, you've got the gap close, which is a little above my reversion target here, say like 99.28, I think was what you were saying a minute ago. We're pretty much in the same page here.
Yeah.
I like it.
Yeah, it looks like it wants to fill that gap back down to the downside.
And most of the time, those gaps do fill. So in the meantime, day traders are all over this. I do enjoy day trading some Disney contracts every now and then, and they're pretty cheap to do, pretty low risk. You can go like a week expiration or even this Friday expiration and day trade those and make some pretty cool little moves on them. Typically, I shoot for like 20% returns on Disney options when I'm day trading them and just walk away. For today, if it rejects off this 101.90 here, this is just the reversion of overnight action here for a couple days. We make it one more quick short back to the opening low here. That might give you another 20% move on day trading some put options, but just be cautious with it. When Cramer says buy it, you're going to find some volatility and liquidity, and it does tend to make the options a little more outside priced of what they should be. So be nimble. CRM. Oh, that's the elephant in the room, right? Holy smokes. We've had this target on for a long time, folks. Let me zoom out and you'll see the big enchilada here. Yes, it gave us a nice, measured move set series up. And then once we came into this block and we got this bombshell of, hey, we're not seeing projections really well, we're going to lose market share. Boom, right back to our floor. And then Cramer said, of course, buy it. I'm sorry, guys. Yeah, investors got pretty hosed on it. There's your Cramer bar. And that's the mother of all Cramer bars. Holy smokes. Can we see support maybe around 211, 212? It's possible. We might see a reversion trade out of this to 246-ish. So in the short term,
I'm seeing support in the 194s.
Yeah, that's possibly going to go lower too, but the old saying of never try to catch a falling knife, well, that's a bloody knife, guys.
Yeah.
Let it hit the floor. let it work out some sort of reversion trade maybe, or at some point we get some accumulation and a continued break over to the next bear targets, because it can go down to 170 pretty quick. With that kind of guidance, though, they're afraid of losing market share. That's a reality. And if it breaks this accumulation, it's certainly in range. Long-term bear targets are definitely displayed proudly on this one, so be careful. Playing the monthly chart here. Here's your hype. Market structure hasn't done anything with this as of yet, so this is where it can happen. And if we get into a flow down to the 130s, market structure could have its way with this thing. So just be aware that if you're a long-term investor in this thing, that bar should have at least made you nervous this morning. And looking at the targets of all the bearish action that can happen in this thing, you got to wonder, is this shoe about to drop here? So be careful at this level. Sure, you'll get some quick, bullish reversions, or as people would call them, resting candles or whatever. It's just liquidity grabs to short it more typically. So, be nimble, be careful on this one. But yeah, we've definitely got some bearish action in the works. Don't catch that knife yet. Wait for it to give you a sign. Day traders, this is what they do. This is a little dead cat bounce. We broke the floor. If we reject here, it's gonna go lower, folks. So that walks like a duck, talks like a duck. It looks like a bear flag on the 5-minute. Yeah, it's got plenty of room to go. So
yes, it does.
Definitely be on your toes if you're going to trade that. But if you're going to invest in it, look somewhere else. Don't follow Cramer into that one. Ouch. His other besties, Meta, again said buy it, and well, there's your Cramer bar. And I'm always telling folks I don't like to short rounding tops. This is certainly a rounding top setup here, but it didn't give us a secondary range bar. It did break its support area, and it did revert this entire candle. Found some support in the base there. It can give you a reversion trade here, but overall, it's one big giant rounding top here too. So your range bars are back here. We get some bear targets out of that, and we've got one right about here, and one right about, where's that other range? There, right between these two candles. We've hit one. This is the other. So if it breaks this floor, we could go lower and we could see a target of about 460 on this pretty readily. Again, looking at market structure, hasn't done anything with this yet. This hype wave needs to be broken eventually. Meta's been around for a long time though. So
yeah, for me, this triggered a short when it failed the 10-day at 471.26.
I think the Bears are going to try to close this gap too. That earnings gap was something to be dealt with. So if we stretch lower, we could see 442 would be a good bear target in there. If it starts to step down through these levels, easy pivot trades, guys. Trade from one to the other. Wait for a setup. Trade the next one. They usually happen in series until they find a true support area. So
Bears 452-ish would be my next level here.
I like it. I got 460 and 451 is pretty keen. Close enough. But yeah, this cascades. Once they start breaking out bear flags on the shorter time frames, you're going to start seeing it. And this is starting to look like compression. Let the day close, and if we breach that 466.50 area going into tomorrow, yeah, the bears are going to be all over this, guys. It cascades. One other thing I did want to note, though, that angular is also important. Give me a second to draw that because this is interesting to me now. I always draw a wedge backwards to reversion, and typically I'm going to find that if there is a reversion to trade, the bulls will try to take it back to it, and we could see a quick push to 470 for liquidity if things get really, get a news article comes out in the middle of the day or something crazy like that. That could be a good opportunity to short too. So if you see a quick move up to that level, look for the bears to go and attack that as well. So it kind of plays right into the pre-market range. So pretty easy trade. I always love to draw those wedges backwards like that and find the reversion line or find the regression line. Usually pretty important. So if you see a quick move up to here, watch for rejections, watch for wicks, and watch for a good bear opportunity to short it right back to support. That could be a good easy day trade. Maybe even take shape into tomorrow. So yeah, just because Cramer says buy it, don't mean go buy it. You guys gotta know that by now. All right, let's load some more up on the grid here. We got GEV. I don't know enough about this.
He's always loving that one.
Yeah. And he said buy it today, and again, there's a rounding top here that I'm always cautious of. The range bar has been broken though, so let's see if it starts to give us a reversion trade. I marked out a level here about half that bar to about 170, 75-ish. It could be a good short-term bear target for a nice little $5 move.
And this is a recent spin-off, so I mean, there's not a lot to chew on this chart.
No. Yeah, it's the daily chart. I mean, we open here with March 27th as the IPO day looks like. Yeah, I don't know, man. I don't know if I want to just up and buy this and follow Cramer blindly into a losing trade. Reversion target's pretty obvious here. The bears are going to try to take this to about 171, 170 or so. If they breach that, they'll take it even lower to 162, 163. Pretty obvious. But I never like to short a rounding top though, because sometimes they'll accumulate and rip a face off to the upside. So if you get enough volume in this thing, it can really be a quick liquidity grab and then get your face ripped off. So be careful with institutions going into this thing. Watch for the book to flip on that. But if the bears take this a little lower, sure, we got reversion targets ahead. But if the institutions are going to do anything about it, never short a rounding top like that. They always accumulate. Sometimes they will rip a face off. Pardon me, 1 second. Fighting a head cold here, so I don't want to
That's all right.
Hork something up into the ears of our audience or our guest here or co-host. It's just rude. All right, Dick's Sporting Goods. Would I buy it here? Hell no, I'm looking for a reversion trade. That's a heck of a move. That earnings was great. And I did a little walking around in Dick's Sporting Goods in spite of them, taking guns off the menu a few years back and becoming less of a sporting goods store. They're still pretty popular. People still go there. I was kind of looking around and I realized that some of the stuff that they're carrying are not some of the more well-known brands. I mean, they do carry a lot of well-known brands, but I look at the bicycle department, for instance. I'm a biker from way back. I'm Generation X. I used to, jump things without a helmet and do some silly stuff as a kid. It's a miracle I survived. But long story short, I look at the brands that are carried there, and when I start seeing depot brands, and it's like, bikes you'd find at Target, Walmart, and Kmart when it was around. The type. They're basically just they're not very good bikes, and I've noticed that they're carrying primarily Mongoose and Nishiki, and they have some good high-end stuff, yes, but their entry-level stuff is not quite as good as some of the other entry-level stuff. And when I'm finding that the good name brands tend to stick to some better support for marketing, I kind of wonder. So sure, there's profit margins to be made there on the general consumer, but the people who are really into it, they're going to go elsewhere for the better stuff. So I'm not sure if that's going to be a good thing or a bad thing for anything on their part, but I noticed that the chart tends to make some wild swings. And when it does, reversion trades abound. So if this was to revert back to 207, 208, and typically when you have a massive earnings call like that says, hey, we did good or whatever, you get a gap up, half back is usually the rule of thumb, guys. So watch out. Cramer's saying buy it. Here's your Cramer bar on a daily. You can see the red flashing. And when you know. If this range breaks and heads low, the reversion trade's pretty obvious. So I think this might give us a good bearish trade in the short term. You know, man, it's not quite a go woke, go broke thing, taking guns off the menu like they did back in the day.
Yep.
But I'm starting to see them turn into more of a big box depot type of store. So yeah, when they get those huge earnings, sometimes they're going to invest it back in the company, and that money comes from somewhere. Usually it's the shareholder's pocket. So look for them to put this into growth. They might start to dilute a little bit. Who knows? But in the meantime, I see a good reversion target, and it might be a good bear trade to scalp that earnings to the short side back down here. So there's your Cramer bar. The signs are all on the wall. We got targets all over the place, and maybe half of the half, so 216 to 207 would be a good bear target set for this thing.
Yeah, and personally, I never trust breakouts, so I wouldn't be buying this now.
I mean, I do sometimes take a buy high, sell higher trade, but this is not one of them. So I agree with you. Yeah, never chase a breakout like this. This is in parabolic territory. It's got to come back to earth somehow. Halfback is pretty typical on an earnings breakout like this. So we know the chart. It's pretty easy. History just repeats itself. Blah blah blah. Chipotle. This thing has been a darling for traders, man. We've scalped all these moves and the moves within the moves. Pretty obvious. Cramer said buy it. Overnight, it didn't expect to move. I used to have this one over here. It was just part of the two-part move here. I stretched it out. It gave me the half target of about 30.42 and some change. Haven't quite hit that yet. It's got the 30.54, 60 area. Can we go and take this a little lower? Well, sure. There's a setup here for an accumulation. It's starting to look like a bear flag on a 2-hour. The 5-minute probably looks like a very nice bear flag. That's the little pop you get. So if they're going to sell it, this is where they're going to sell it here. Look for a breach of the mean. So if it breaks below 30.71 throughout the day here, the bears are going to try to take this for a full measured move lower.
Look at 30.40. That's the 50-day.
Yeah, and that's exactly right. So that's your 50-day right there. And it's about half of our move. So in agreement, both the moving average and the measured move trades are pretty much pointing to the same target, about 30.40. So yeah, I'm a little bearish on it. It was kind of a triple top that was obvious here. You can see the 3 highs here and the rejection. So we got some good bearish trades out of it already, but I think we're going to probably be able to take it a little further. And Cramer said buy it to boot. So, you know, the bears are all over this. It's only obvious. Can't go wrong with that. Moving into the other side, we've got a couple other things he mentioned that were kind of oddballs. What the heck is CDNS?
CDNS?
Yes,
Cadence Design.
Is that one of his darlings too? I never pay attention to that guy.
I think he mentioned that one. I mean, this one looks like a textbook short to me, though.
It sure does. Yeah, he's this was on the buy list, so I mean, I did see him say buy.
I mean, this looks like a short.
Yep. So reversion target's pretty obvious. You see the daily trend here. Reversion target to about 283 is pretty easy. It's already made about half that move though, so we've got the primary here. Secondary sits right about 287.40. Watch for a bear flag break here after this accumulation on the 5-minute. It could give us another few points lower. I kind of like it already. Split the difference though, and just kind of make sure you know where about the mean is, and it's already rejected that. So yeah, Cramer said buy it. We got a little pop up in liquidity this morning, and it was sold right to him. So retail chased it a little bit on Cramer's call, and here we are running for a short. Good bearish moves, and we can split that up into sub targets too. So we got like 286.65ish is about the middle, and that's about where the 2-hour 200 would meet it. So day traders will be shooting for that. Swing traders will be shooting lower for about the 282, 283 area. Good short. I like this one. Cramer said buy it. Let's sell it. Last but not least, we got APP, which is another company I don't know much about. I don't know.
Yeah, App 11.
I don't know that I would see this as a point to buy it. I got a reversion area kind of marked out here to like 72, $70 to $72 for liquidity zone. Look further left. We've got market structure, had a very short recovery time for accumulation. The mean reversion was there. We accumulated. It went higher, shot up to a liquidity zone, and that's where I kind of get about half this area here is looking back here. And this is where that, this is the 76.3 fib. I'm always bad at fib math, but that's about where it would be on this high here. So we'd love to see this revert at least half that trend. So in the short term, we could see, 77 would be a good short-term bear target. Long-term bears are looking for about a little bit lower to 72 to 70, somewhere in that area. So
yeah, this one looks somewhat interesting. I've got a model that looks at stocks that make 52-week highs within the past 15 or 25 days and then pull back, because there's some decent research that those are good buy spots. And so, I mean, interesting. Made a high, pulled back in. Right now, kind of sitting on the 10-day here, slightly above.
it's got potential to eventually accumulate and be a good buy, but for now, I think pullback is in the mix. And again, another wedge where we get a pivot and an angular. So if it holds right around the 2-hour 200 here in the next couple of days, around $80.50, if the bears don't attack this thing too low, it could be a decent buy here. And typically when you get these wedges, if the buyers fall in line here, it's a pretty simple trade. So you look for a simple measured move, and usually you go to about the regression line from this rejection on angular to the regression. Let's go a little shorter, maybe about there. And then you step that outside the box. So if by tomorrow it starts to hold support here and starts to get back to this angular, half and whole moves, pretty easy. And look, top of the box lines up with the previous high, and the mean of that box lines up with the fib level here. So we could see a bullish move outside later on, but I think we're going to accumulate a few days here before we really do. There's a way to figure this out with fib lines, but we also kind of look at the structure of accumulation as a whole. So let me explain that in a minute. When we're seeing this wide range here, you get a broadening pattern that's sort of in a descending wedge. If you use your imagination, you can see it through the chop. It already attempted a reversion target down here, and this got to the point where now we're accumulating a narrowing range, so it's getting tighter and tighter in this wedge here. So if you look at the structure of accumulation, usually you get the outcome move pretty easily. So I'll split it down here. If it holds this level, you could see some buyers swing in and take it to the angular resistance here, and maybe we get a breakout trade. But for now, it's looking to accumulate at least, and maybe give it a little pullback for liquidity down a little lower. So be nimble with this one. It's got a good chance of going either way, 50-50, but it's interesting. So we'll keep this on the radar, I think. But at the same time, man, it looks a little gappy on the high. This requires a little more research because this is an interesting stock all of a sudden.
All right, there we go.
So I'm looking left and I'm looking like, hey, this has done this game before. We had exactly this wedge in a smaller time frame and then a big gap. But we don't have earnings for a little while, and we've already made this gap. And it already reverted earnings, more or less. This might be good later. I'll keep this one on the radar. I'm going to put this in the, I had the, there it is, hold. APP, we'll add that to hold. Pretty rare that I add something Cramer said to buy into that list, but I'll keep an eye on it for sure. Any other good mentions?
No, besides, I mean, he's still all NVIDIA.
Of course. Yeah, that's the easy fruit for him. I gotta
Yeah.
wonder, you know, I'm looking at a couple other swings setting up. Like I've been watching IBM really close. So I've got a position in it, um, and I'm looking at this structure where it's accumulated. It's got some pivots to revisit and so forth. I went long on that bounce, and I took some spreads into it. Converted half those spreads, or a little bit more than half those spreads, into butterflies, where I sold credit spreads against the debit spreads, and then I went and took some profit on some of the debit spreads I had open on that. Now I'm just waiting to see if this thing's going to either give us a second reach pullback to about 164 and then bounce, or if it's going to get its face ripped off and start heading to 155. So
Yeah, IBM is one where the real opportunity is, in my opinion, is the entire AI ecosystem. So you've got three areas. You've got, sort of the ancillary companies. You've got the emerging leaders, which are, the smaller market cap, which we're actually launching a 2x ETF on soon. And then you've got the infrastructure,
right.
which are, the REITs, the industrials, the utilities, the solars, who are all providing kind of ancillary services to AI. So, I'm buying all of those areas on depths.
Yeah, I think that's a good plan. And I mean, for all we know, some of the underdogs, IBM is one of them, could pull an Nvidia. We could see all of a sudden they're the go-to people for the infrastructure, and that's kind of why we look that way. Um, in the meantime, it's providing good volatility, so I've been able to make some decent options trades on it, and I'm looking for possibly running this as a if it gets any lower, I'm thinking about possibly adding a few leaps that I can go and run some synthetic covered calls on. I'll have to see how it plays out in the near future, but it's been interesting to me, and it's made some good trades so far, and it's providing volatility, and that's what I love to look for.
Yeah, I mean, the whole AI thing makes IBM relevant again.
Exactly. And, it did the same thing with Intel. Even Intel was on the radar for things through all this mess. And that was an easy trade. Now it's basically made a little bit below a reversion. It's printing a bear flag. So the hype wave's kind of ending for this one and maybe picking up for IBM, so to speak. So when, the old name goes, when one door closes, another one opens. Well, watch this. If it hits, $30.30, starts to accumulate, and suddenly the bear flag looks like a reversal, sure, we can get a reversion trade out of this thing to like 38.50, 38.40, somewhere in that neighborhood. But so far, that's a pretty steep drop for Intel. I love trading it bullish, but I don't have to stay biased bullish. I can always trade the chart, and that's done me well. Another mention, of course, is AMD. Everybody watches AMD, and that's been easy trading too. So at some point, the hype wave needs to come to its peak and break on the beach. So, we got to have some pullback. And this has been pretty easy for AMD. A nice measured move down, came back, tapped a reversion target and rejected, came back to support. Can it trend higher? It's possible, but I'm seeing some accumulation, and it went from broadening to contracting all of a sudden. So we get a diamond pattern. We know that those usually precede volatility. So we can see the broadening, we can see the contraction. I give IBM or AMD to about the end of the first week of the month here to accumulate and maybe give us a breakout move, either long or short. So the AI field for all of these little guys, it's going to start to make sense on the charts pretty soon, and that might be a good time to put an ETF together on that.
Yeah, I mean, we should be, we're supposed to be out beginning of June, but we haven't found a lead market maker yet. 2x products can sometimes be a little bit weird, but it's kind of, it won't have AMD. So the idea is 500 billion market cap and below. So none of the big companies, basically, because you can get those 5 million different places.
Right.
Why pay up to get, Nvidia and Fang and Friends when you could buy the Qs.
True. Good point. And that's, when you're into the Qs and hell even a Russell. I mean, you got some good volatility there, and that's what pays the bills is that volatility. That price has got to move for us to make money. And I think there's going to be some big moves in the near future, especially with the whole AI infrastructure situation. And then I'm also thinking there may be some consolidation in that space too along the way if things aren't carefully managed. I know what was it, Snowflake,
Yeah, I think they've had some issues.
and it's pretty obvious if we get market structure at its finest. It's in that broadening pattern as you see at the bottom here, and if things start to accumulate, pardon me a second. Eventually, I'll get rid of this cold. We're starting to see infrastructure accumulate, and we're getting into the end of a broadening pattern, it looks like, and maybe we start to see this thing consolidate and start to make some bull moves. I'm keeping my eye on snow because it's at a low enough point where I think things could swing for it. But if things get bad and worse, well, we know where the floor is. If it starts to fall through there, we'll just short it. It's got plenty of lows to get to here. So it's going to be an interesting sector altogether. And if this doesn't rotate, well, we know the writing's on the wall for a lot of other things. So kind of be ready for.
Yeah, it's one of the main sector themes that I look at. Argentina, gold miners, being in China being the others, but the majority of what I do personally is anything AI related at this point. Oh, and weight loss.
Yeah, and weight loss. That's been a killer market to trade too, man. I mean, those things are just nuts. Um, I've noticed a lot of things happening in as far as people go. I'm a people watcher, and I've noticed like Generation Alpha is starting to look like early stage Generation X. Like some of the kids are out there doing some, well, rather Gen X type of things. They're out there jumping their bikes and wrecking their skateboards and having a blast. Whereas the previous generation wasn't into that as much. So I mean, kind of interesting. We're starting to see things start to change back to things that were fun. So when you start looking at the infrastructure things and pay attention to the way people are kind of reacting to it, you see swings in the market, you see rotation, and if you look at what people are into, you get a good feel for what to look at next. So when you start looking at infrastructure things, they tend to flow with it. I don't know a better way to explain it, really. I'm just kind of babbling, but yeah, pay attention to people. As
Yeah.
generations come of age and things start to change hands, that's where things start to look better. And then looking at my generation, I noticed a lot of people are getting back into being a little more physical, a little more outdoorsy. Look at like whole towns that are like putting in outdoor activities and they're investing in that infrastructure. People are getting out more, they're getting back into shape. So weight loss is primary on that, and that's kind of where people are at. They're taking the weight loss drug way to get there, and then eventually they become more physical and they start to maintain being in shape. So some of those structures in the market will start to take shape. Some of the consumables for like entertainment stuff or fun outdoor stuff like your jet skis, your dirt bikes, and all these guys they're going to wake up, and I think we're kind of on the cusp of that. So people getting healthy again. That's a good thing. As
That
I'm
is a good thing.
as I'm watching snow just drip a whole bar down. Wow. Anyway, that's where we're at. We'll take a quick little look at SPY and maybe see if we get a couple more day trades set up. But I think we're pretty much. I'm done for the
Yeah,
day.
I took a little bit of profits at the high I'm looking for if I can get another jump, I can make the trade free and then ride with what I got left. So we'll see.
There you go. The reversion's already been made after that high, so watch for this accumulation right around 254.15 or 524.15, and we'll see if we can hold that and run higher. If not, the range can give us reversions all over the place. Got all these base targets down here. If for those of you who don't know, I with the bullish bears, I day trade SPY and ES and NQ every morning, and it's so easy to see these structures, even though it's choppy as hell. This is very much beating on people trying to swing all these trends. But when it gets choppy like this is when we really start to shine. So we actually take these little 3 and 4 point scalps in here, and we'll start to day trade some options later on in the day and the midday. It makes it much more feasible. After 11, you typically get an idea where the range is, where the reversion targets are, and that's exactly it. That's where those 0-day options are just excellent to day trade. Too many people buy them on the open and just hold them all day and hope for the best. Don't do that. Trade them. Take some profit. If the trade's free, ride it, because sometimes you get a free lottery ticket. But certainly wait and see where this is going to go before you go and take a midday trade. This is where we get on to 1 o'clock. We start to find some possible reversion trades or even an accumulation in a big face ripping rally. So pay attention to the chop. Certainly, we teach price action based on that chop. We're able to just shine through that stuff, and then when we get these outside moves, those targets are already laid out because we traded them. So this is typically price action repeats itself in the day, and if SPY's in a range, it'll typically visit every point in that range. Anyway, I think we can leave with that. Have a great one, guys.
All
Thanks
right.
for joining us. Tell your friends, and certainly, if you watch our show and we make some call outs and we help you make some good trades, don't be afraid to get on the phone with Cramer and talk about it. That'd be fun.
That would be awesome.
Give him a call, give us a shout, because we really, we're in the same place. Our hearts are in the same place. We just want to help, the same as Cramer. But when it comes down to it, if we get a little humorous rivalry there, it's good for everybody, and we want to help too. And this is where we are. So we'll make fun of Cramer at the same time. We would love the guy too. We can't help but love the guy too. His heart's in the right place, just at the wrong time. Anyway, again, thanks again, guys. Have a wonderful week, and we'll see you next time.